NIO stock bounced on Wednesday, closing the session at $7.12 per share. That's a gain of 19 cents, or about 2.75% on the day. On the surface, it looks like a modest rebound after a tough start to the week. But when we look deeper at the details, today's move is telling us a lot more about where the stock stands technically, how sentiment is shifting around Chinese equities, and what traders are watching heading into the second half of the month. Let's break it all down. First, the price action itself. After Monday's sell-off, which saw NIO tumble by more than 6% to close at $6.91, investors were left wondering whether the hard-fought $7 level would hold as support. Tuesday brought only a slight reprieve, with NIO finishing the session at $6.93. It managed to spend much of the day above $7, but a late dip erased those gains. That left the stock precariously balanced, neither breaking down nor breaking out. Today, we finally saw a cleaner rebound. NIO spent much of the session comfortably above $7, and although there were still intraday swings, the close at $7.12 was decisive enough to register a clear-up day. That matters, because it shows that buyers are still willing to step in at these levels, defending the stock from sliding further back into the sixes. So, what drove the bounce? The first factor is purely technical. $7 has emerged as a critical line in the sand. After breaking through it earlier this month, NIO has been testing whether it can transform that level from resistance into support. Monday's drop back into the sixes raised red flags, but the rebound on Tuesday and now today suggests that buyers are determined to hold the line. Technical traders watch these levels closely, and the fact that NIO managed to climb back above 7 reinforces the idea that this is becoming a battleground price point. The second factor relates to sentiment around NIO's fundamentals. There are conflicting headlines in circulation. On one hand, Deutsche Bank has highlighted that the company has around 100,000 cancelable orders for the new third-generation ES8 SUV. That number signals strong demand, even if not all of those orders ultimately convert into deliveries. On the other hand, there have been reports of potential delivery delays, raising questions about whether NIO can execute on time and at scale. This push and pull between robust demand and execution risk creates uncertainty, but it also keeps investors engaged. They know the demand is there, and they're watching closely to see if NIO can meet it. The third factor is analyst sentiment. UBS recently upgraded its stance on NIO, citing stronger performance from new models like the ES8 and the Onvo L90, along with a healthier balance sheet following the $1 billion equity raise earlier this month. That raise was painful in the short term, as it introduced dilution and briefly tanked the stock. But with the cash now secured, NIO has more flexibility to invest in R&D, expand its battery swap network, and roll out new vehicles. Analysts highlighting that improved financial position gives investors more confidence to step back in on dips. But perhaps the most interesting factor today came not from NIO directly, but from the broader Chinese equity market. Alibaba shares surged on Wednesday, climbing by almost 9% after announcing that it would expand its artificial intelligence investment program beyond an already massive commitment of $53 billion. This announcement lit a fire under Chinese tech stocks more broadly, with the Hang Seng Tech Index and related benchmarks posting strong gains. Investors saw Alibaba's move as a sign of confidence in China's tech sector and a reminder that large-scale innovation is still very much alive in the region. Why does this matter for NIO? Because sentiment often moves in waves. When one major Chinese growth stock posts a big win, it can spill over into other names. Today, Alibaba's surge helped fuel broader optimism around Chinese equities, and NIO benefited from that tailwind. Even though Alibaba is in a completely different sector, cloud computing, AI, and e-commerce, the halo effect of rising Chinese tech sentiment gave investors an extra reason to put money back into NIO. This is a dynamic worth watching. NIO's fundamentals will ultimately drive its valuation, but in the short term, macro sentiment toward Chinese equities plays a huge role. If investors feel confident about China tech and growth again, NIO will almost certainly capture some of that inflow. Conversely, if sentiment turns sour, even good company-specific news can get drowned out. Now let's talk about where NIO stands technically after today's bounce. Support is still right around $7. The fact that NIO closed at $7.12 today means that support is intact for now, but the stock hasn't put enough distance between itself and that line to declare victory. Traders will want to see consecutive closes above 7 to confirm that the level is truly holding. Resistance remains up around $7.50. That's the ceiling NIO tested last week before failing to break through. Until the stock can clear that level with conviction, upside momentum will remain capped. On the downside, 650 becomes the next key level if 7 fails again. That's where buyers stepped in during the equity raise sell-off earlier this month. If NIO were to revisit that zone, it would likely attract more bargain hunters, but it would also reignite dilution concerns. So, how should investors interpret today's move in the broader context? On the bullish side, there are plenty of positives. The stock bounced convincingly off the $7 line after a shaky start to the week. Analyst support from UBS reinforces the idea that the equity raise strengthened, rather than weakened, NIO's long-term prospects. Strong ES8 order interest highlights that demand remains robust for NIO's premium models. The Alibaba-driven surge in Chinese tech sentiment provides a helpful tailwind for risk assets like NIO. On the cautious side, the risks haven't gone away. Delivery delays for the ES8 remain a potential drag on sentiment. Price competition in the Chinese EV sector continues to squeeze margins. Dilution from the equity raise still lingers in the background. Broader macro factors, like the eventual expiration of Chinese EV tax breaks and questions about consumer demand, continue to cast a shadow. What comes next? The near-term story is all about whether NIO can hold above 7 and build momentum towards 750. If the stock can string together a few sessions of strength and break through that resistance, we could be looking at a run back toward $8. But if it falters and slips below 7 again, traders will turn their attention back to 650 as the next line of defense. Beyond the technicals, the calendar is also important. NIO Day 2025 is coming up on September 20th in Hangzhou. This is the company's biggest annual event, where it showcases new products, technologies, and its strategic vision. Investors are expecting major updates on the ES8, the Onvo L90 family SUV, and the Firefly Compact EV brand. These launches are crucial for broadening NIO's customer base and competing effectively with rivals like Tesla, BYD, XPeng, Li Auto, and Xiaomi. If management can use NIO Day to reassure investors about deliveries and highlight its innovation pipeline, the event could serve as a powerful catalyst to push the stock higher. So, to sum it up, NIO closed Wednesday session at $7.12, up 19 cents or 2.75%. The stock bounced off the $7 level, showing that buyers are still defending support. The rebound was aided not only by analyst optimism and strong ES8 order numbers, but also by a surge in Chinese tech sentiment driven by Alibaba's nearly 9% rally on AI investment news. This bounce is encouraging, but it's not yet decisive. NIO still needs to prove that $7 is reliable support and break through resistance at $7.50 to re-establish bullish momentum. In the meantime, investors should watch how the stock trades relative to these levels, monitor news around ES8 deliveries, and keep an eye on sector-wide sentiment coming out of China. Long-term, the fundamentals remain intact: growing deliveries, a differentiated battery swap ecosystem, a strengthened balance sheet, and a robust product pipeline. With NIO Day just around the corner, there's reason for cautious optimism. The road ahead is full of challenges, but also full of opportunity.